Hello and welcome. Thank you for joining us today for this next presentation of our Buyer's Perspective webinar series. In today's session, we'll take a look ahead to 2012 and take a look at what buyers are saying from a number of different perspectives to aid you in your account planning and where you want to prioritize your time in the year ahead. To share a buyer's perspective, in doing so, we welcome back the host of the series, Chairman Jim Melillo. Jim's career includes broad CFO experience with both public and private companies and credentials with corporate development, treasures, mergers, and acquisitions. Let me quickly share a few logistical procedures and we'll jump right in. This presentation will run about 30 minutes, after which we'll address as many questions as we have time for. Also during this presentation, we prepared a couple different poll questions and welcome your participation in responding to those. Jim, without further delay, let me turn the program over to you.
Eric, thank you, and everybody, welcome. This is going to be a slightly different session than before from a couple of standpoints. First of all, we are going to work with what most buyers are thinking. So what I've done is talk to our 18, 19 CXOs. I've also gone out and taken a look at what CEO Magazine, CFO Magazine are saying for the coming year, and also tried to take a look at a macroeconomics, drawing a little bit on my economics background. The second thing I want to do is I want to talk about the fact that I'm not going to overwhelm you with statistics. Yes, there'll be a few. You have to mention the GDP in any discussion. But more importantly, what I want to do is spend this time with you talking about your direction. And I know that on this call we'll have several hundred people who will be looking at their direction, and it's going to be different. It's going to be different by industry, by geography. It is going to be different based on the regulatory climate of the customers you're working on. And so what we want to do is take a look at these three, as well as how you address them, how you deal with them, how these fit with you. And also, we're going to add a new twist here. We found out that we have a lot of non-sales people on these calls, people in R&D, people in finance, people in marketing. And so we're going to talk also just a little bit about their sales opportunities inside and what some of the sales threats are. And as always, I promise I won't mention your products. So for me to get going, let's take a look at what you think is going to happen in the coming year. Let's put a poll up. And let's take a look at how you think those numbers are going to come out. So I expect my sales in 2012 compared to last year to A, significantly improve, B, moderately improve, C, not change, D, deteriorate, E, I have no idea. Let's go. As you know, polls are only open for about 15 seconds. And what we want to do is take a look at where you think you are relative to what we're going to see in the different industries and we're going to see across the U.S. So, close the poll, and if we could, let's take a look at some of these results. And when I take a look at these, Sean, if you would, give me the readout of what we came up with here on A, B, C, D, and E.
Jim, we have a pretty clear winner here. Candidate B, moderately increase at 55%. Significantly increase at 28%, which shows us that over 80% of folks on the call, which is good news, showing an expectation for growth next year. No change at 8%, deteriorate at 8%, and 2% of the folks have no idea.
Fantastic, great. And 83% are talking about their growth, and as we know, that growth is going to be a function of three basic components this coming year. One is going to be the underlying industry. It is hard to escape your genetic structure of your customer. It is difficult to escape that underlying DNA of what they're doing. And it is extremely possible to do that. And we'll talk about how you do that. But the underlying DNA, it's a lot easier to be leading the parade when that parade's growing at 12% than when it's growing at 2%. The second point is it is able to change that DNA. You are able to change that by taking share. And the third point And the most important point on this is going to be, what do you do about the hand you've been dealt? So, a couple of statistics, really quite simple. GDP growth, right now it's being pegged at around 3.5%. Some people are as high as 3.8%. Doesn't sound like much, but basically that means that your economy doubles every 20 years at 3.5%. Second of all, it means that that's doubled off of what we were doing in 2010 and 2011. And so this is a nice little growth rate. Where does it lay out? Well, in the auto industry, we're looking at growth rate that's somewhere between 0 and 6. But if you take a look at the major players, it's roughly 4 to 6. So that 4 to 6% is a function of both suppliers as well as underlying automobile makers. And again, it's also a function of what they do as far as manufacturing in the U.S. versus what they ship overseas. The cloud. Everybody knows the cloud. Well, the cloud has a broad range of growth statistics here, 15 to 25, 25 being at the implementation sale of the cloud as well as SAS, software as service, the 15% being around the hardware and software that is going to go into building that. The reason the cloud growth is faster than the underlying software and hardware is quite simple. You can put a lot of people on the same platform. In the pharmaceutical industry, we're seeing probably one of the strangest years we will see in the last 20 to 30. And this year will last approximately 24 to 36 months. What does that mean? What this means is this year, if you were Pfizer and you were sitting on a $10 billion heart drug, you were going to lose your patent protection and people were going to jump in. If you are AstraZeneca, you have the exact same thing coming up in the next year or so. And so drugs like Lipitor, Ambien, all are coming off patent. And so for those companies, they're looking at shrinking for one of the first times in history because these drugs have gotten so large. And when you lose your generic protection, they've come down. On the very upside, at most we'll see 12% growth among the medium-sized biotechnicals. So for the first time in history, pharmaceuticals are going to become a cost-oriented business. And so here, automobiles, we've had cost centers for thousands of years since they started. The cloud is going to be all about revenue. The pharmaceutical business is going to be about getting products through clinical trials from phase 2 up to phase 4. And second of all, it's going to be about cutting costs. Radical change, and that change this year will probably last the next 2 to 3 years because each company will have their major blockbuster hit at a different time. So what's somebody to do? You know, Jim, my number for revenue growth, my quota is way beyond 3.5%. Good news. It's time to start stealing. You can go to your boss. You can even talk to the local cop and say to him, look, I listened to Jim, and he said it was okay to steal. Market share shifts dramatically at only 2 times. When either the market is growing extremely fast and it's disorganized, or when it's growing extremely slow and it becomes ruthless. And so you are now, for many of your industries, in that 3 to 4%, are going to be looking at that ruthless end. For those of you in that cloud area or in that mid-sized biotechnical, you're still looking at that fast and disorganized. You need to begin thinking about how to steal share. And the way to do that is to work with your customers who, interestingly enough, are continuing the trend of moving from more suppliers to fewer suppliers, and they're moving from suppliers to partners. So this becomes one of the tools, and we'll talk about others. For those of you that are in the slower growth industries, it's time to get ruthless. It's time to steal share. For those of you in the cloud or in the voice over IP business, prison corrections, those of you that are working in the prison field, number 4 growing field in America, expected to grow double digits for the next 5 years. Those of you that provide services that are attached to that system or any one of the high growth industries get a chance to play because it's disorganized. And so let me take a step back for a minute and talk a little bit about the customer's customer. And within the customer's customer, the idea I want to share with you is around what you do. So you as a R&D department, you as a G&A, you as finance, you as HR, you don't create demand. Demand begins with the sale. And you are the derived demand. What does that mean? Well, derived demand is an original concept that came out of France about bicycle rims. And it began to say to people, look, you don't sell bicycle rims. You don't even sell bicycle tires. What you do is you sell tires to people who sell bicycles. And that derived demand is a fairly complicated concept, but in its simplest form is you need to help your customer drive their demand, your customer's customer. And you need to recognize that everything begins with a sale. In the past, this was a simple job to have. Sales were growing at 7%, budgets grew at 6.85%, a little bit left over to pass down to the shareholders. Well, we're finding that you need to figure out what's the best use of the company's money, because you need to be moved from being a support organization to a partner. Let me talk about what that means. And I call this stealing from yourself. As I mentioned before, we're seeing more people move from suppliers to partners, and that's as true inside as it is out. And so the first thing you need to do is begin to start fighting to show an internal ROI. Let me give you a couple examples. Boeing has been in the news recently, and you know their biggest competitors are Airbus, China, and other countries. Now imagine that you're working inside, that you work for marketing, you work for research and development, you work for manufacturing. You have this newest competitor called the Carolinas. Your company, as far as you were concerned, was called Seattle, Long Beach, and this is where your manufacturing facilities are. All of a sudden, the organization has decided that they're going in another direction. Salespeople know that and have heard that hundreds of times. They've heard the customer say to them, you know what, you know, Jim, we really appreciate what you've done with us, but we're going in another direction. We're now seeing that inside. So the next area I want people to begin thinking about is, how am I selling inside? How am I proving that I'm the best resource? How do I, as a manufacturing facility in Seattle or Long Beach, prevent? The horse is gone on this barn. For you that are listening to me, what are the horses you want to keep in your barn to keep them from escaping to the Carolinas? Boeing's built over $1 billion of business and put in more than $1 billion worth of assets into that business. And that is $1 billion that will not be spent with your department in Seattle, with your department in Long Beach. Another way of taking a look at that, for those of you that sell inside, is the outsourcing business. Took a look, this year outsourcing will do $375 billion and will continue to outpace the growth of the GDP of the world, which means by definition, for those of you inside, you're losing market share. As an R&D group, as a training group, as a HR group, as a finance group, as an IT, I can go down the whole list. As groups internally, you need to begin to resell your business proposition. You need to build that ROI. You need to keep the Carolinas from coming along, or the outsourcers from becoming your competitors. The next area I would like to talk to the sales force about is supporting the BRICS. Now, you may or may not know BRICS. Here's a pretty picture: Brazil, Russia, India, and China. So why should you be supporting the BRICS? And let me talk a little bit about them, because most people will say, sell to the BRICS, sell to the BRICS. Well, I know that most of you don't fly on a weekly or monthly basis to Brazil, India, China, or Russia to make sales. A lot of you are U.S.-based salesmen. So let's take a look at, quote, what's happening in those secondary markets. Well, For those of you that weren't watching, China became the second largest economy in the world last year. And oh, by the way, they're growing 3 times faster than we are, which means that they should overtake us probably within the next 4 to 6. By the way, Brazil is bigger than either France, Italy, Korea, or Mexico. Oh, India, by the way, is bigger than France and Italy combined. A couple of statistics. China's going to buy more cars this year than the U.S. GM's last 2 quarters are bigger in China than the U.S. and growing faster. So by definition, what is good for General Motors is good for China. They're becoming a Chinese company. For those of you in technology, Cisco for the last 4 years has had a decent time. They've grown from 35 to 43 billion. Huawei, their biggest competitor, has grown from 10 to 27 and is growing at 30%. We expect that next year, Huawei will be somewhere north of 34 billion. You now need to sell to the BRICS. What do I mean by that? The reality is every one of your major customers is moving into building a brick business. And so by definition, you need to be able to work with them. You need to help your Chinese, your Indian, your Russian, your partners in Brazil to link to the global sale. Jim, you know, I'm selling over here to a regional parts manufacturer. Yes, you are, and that regional parts manufacturer is selling into GM, Toyota, Kia, or one of the other automobile, or one of the paper, or one of the news, or one of the... And those organizations are looking to expand into China. Gee, Jim, I only work in healthcare. You're right, and that's good news because most of the healthcare organizations in America are looking for opportunities outside of our shores. So how do you coordinate your discussions with your counterpart in that secondary market, that little market called China, called Brazil, called India? And more importantly, how do you come back to your client and talk about your ability, your organization's ability to affect me as a company globally? How do you help me overcome my competitor here in China and help me grow my business? How do you coordinate that? I'm not quite sure I understand you, Jim. Let's go through that. GM has been in China for 15 years. China is the biggest market. Brazil is the 3rd largest market for General Motors. Oh, by the way, Harley-Davidson sold 268 motorcycles in China last year. They sold 500 in Milwaukee. So General Motors, the largest part of their business is China. The fastest growing part of their business is China. They are becoming, in a sense, a company oriented more towards China market than the U.S. Harley has sold 268 motorcycles last year in all of China, 500 in the U.S. How are you going to work with Harley, not in the U.S., with Harley globally? How are you going to work with the Cleveland Clinic, not in just Cleveland, but also in Dubai and also in China? How are you going to work with your customer? You need to sell inside. You need to bring together the opportunities that are there. Let's take a look at Symantec. Symantec recently made news by selling its Chinese joint venture to its partner, Huawei, by the way, because they did not feel they had or could make a mark in the Chinese market as well as Huawei could alone. Let's take a look at that Chinese market that Symantec is not going to have a joint venture in anymore. In the next 12 to 18 months, there's expected to be a 400 million phone purchase within China Telecom and China Mobile of Androids, prone to viruses. China bought 70+ million PCs last year and is expected to be the largest PC market in 2. You need to work with your client globally. You know Symantec, you know Harley, you know Cleveland Clinic. We know that China, Brazil, Russia, India are not your core markets. let me talk to you about how we, as an organization here, can help you get into them without investing money in R&D, get into them without being out significant capital assets, get into them and be able to. You have to sell outside to Cleveland Clinic in Cleveland, to Harley in Milwaukee, and you need to go inside. Create a joint venture between your international sales team and their international direction. The same thing goes for every expansion. You need to be able to create a relationship between you and your internal R&D people, them and their regulatory people. You need to step up. You need to step beyond what I'm thinking as a direct sale that I expect from you as a paper seller, as somebody who sells technology, as somebody who sells raw materials. You need to step up, and you need to sell to me outside. You need to sell to me inside. And to sell to me inside, you've got to go and sell within your own organization. By the way, many of you have read this book or have asked for it, Cloudy with a Chance of Rainmaking. Worth looking at, even if you're not in the cloud business. I would say to you that 15-20% of this book's about the cloud, and the other 80% is around how to have different business discussions within it. Think of it as a business primer on how buyers make decisions. So, pulling this all together, what are the shifts that are going on? Well, a couple of things. First of all, we're looking for higher than normal ROIs. Historically, as a CFO, I looked at hurdle rates, ROIs, and internal rate of return was driven off of my cost of funds. And yet we're seeing right now the hurdle rate among the Fortune 500 to be 18 to 22%. And for smaller projects, we're seeing numbers, and I put here 25+%, we're seeing numbers as high as 50. Now, a 50% internal rate of return ROI is absurd. How do I know it's absurd? How much money do you get from your bank each year? Anything near 50? Anything near 25% a year? Not even close. So my cost of money as an organization is probably running 1-2%. My return on assets, all the ROIs put together, is probably running 5 to 8%, maybe 12 if I'm the hottest company around. To ask you to step in with 25 to 50 is absurd. But nonetheless, I wanted to share these, that the 18 to 22%, though, is a good number, and that's where you need to come in and show me how you hit that. The last area I want to talk to is sell to regulations. We've had a significant impact on business in regulatory climates here. Healthcare will shift about $25 to $50 billion into the healthcare provider business in the next 3 years, till 2014. What that is the government is looking to give $44,000 to $66,000 per physician, spread over 3 years, to the approximate 1 million healthcare providers in America. About 850,000 doctors and about 150,000 other healthcare providers. How are you dialed into this 25 to 50 billion that is going to hit healthcare for 1 year to 2014? So the 1 year was 2011. That was year one. 2014 is year end. And then in 2015, they actually provide penalties. So this is a carrot and stick. How do you play on the carrot roll? And by the way, get some of that 25 to 50 billion. How do you prepare the healthcare industry for not getting the stick? What happens in 2015? I saw the finance industries. Look, there's been a huge change under the Dodd-Frank regulations relative to reporting on leverage, liquidity, risk, capital, et cetera. Not only is it hitting the majors, too big to fail banks, but it's also hitting credit agencies and hedge funds and thrifts. How do you help me create that transparency? The government right now has undertaken to put more rules in place for EPA, state, and educational reporting. How do you participate in that? How do you support the results of those reports? There's been a huge number of regulations. Many of the people that have had their businesses regulated are struggling with them. The question then becomes, how do you help me with that? Look, there are golden opportunities to differentiate your value and create success. We know that those lie in ROI. We know they lie in various other areas. We normally would have a second poll, but I want to open up a few minutes for questions, so I'm going to jump to a summary slide for everybody to look at. As executives right now, we're looking at moderate growth to high growth, depending on our industry, and some of us are going to get hit hard. We're looking at the capital priorities, and that's shifting away from the traditional base of U.S. R&D, U.S. manufacturing. How do you help me as an organization maintain that funding, maintain my size, maintain my people? How do you become my partner so that I don't lose my research and development to India, so I don't lose my manufacturing to the Carolinas? How do you show yourself to be an industry leader? Everybody's not an industry leader, but everybody can appear to be one in my eyes. And one of the best ways to do that is to partner inside with your organization, with your salespeople in different locations, in different verticals, and come to me with a total solution, a total U.S.-China solution, a total healthcare provider solution, a total IT chief medical officer solution. That's what I'm looking for. These are the things that will change me, wrapped up in a strong ROI with a hurdle rate of 18 to 22%. We're going to continue this series next year. We want to be able to bring you more insights into executives. I want to continue to work with my executive team as well as the other executives that I get a chance to share thoughts with, get a chance to interview. You have an opportunity to really change your business. Take advantage of these webinars. Go back and listen to them. We've done them on finance. We've done them on the ways in which you get in to see an executive. We've done them on the first 5 minutes of the call. Spend some time investing in your own ROI, your own return on investment. The only thing you have to invest in yourself and your customers is your time. Make it valuable. Don't waste it. Eric, any questions we have today?
We do, Jim, and as we are right up against the top of the hour, we'll just cherry pick a couple here. First one, a couple related to the subject of some challenges in the past year around deals in that no decision state. The customer hasn't said no, but they haven't purchased yet. What do you see changing in the year ahead, or what might folks do differently to try to break through some of those stalled deals?
The biggest competitor you had last year and probably you're going to have again this year is to do nothing. You've got to focus over onto that ROI. In addition to that, what I would say to you, and the biggest mistake I found my organization's always making, is that when you ask my internal people, how many people do you have on the HR role that we might eliminate if we implement this software? And it's, well, we have a part-time person in Akron, I think he works 4 hours a week. Well, the reality is we have much higher costs invested in HR, finance, or any other area you're coming to talk to us about. Explore with the people in the financial group attached to that department what the true costs are. Go to the CFO and act as an outsourcer and provide your best practices. Show me how you've done solutions. Show me where the financial levers are that your firm affects me, and show me how I reduce the risk. You're going to stand a great chance of kicking me out of that do-nothing phase into a, boy, was this a good investment.
Another one, Jim, there's been a couple surveys out that mid-sized companies are expected to boost capital spending next year. Any thoughts in terms of which industries you see spending the most or changing the most with respect to technology investments?
Well, I would say to you, first of all, this is what I've been talking, as those of you that have been listening to these webinars for the last 18 months, this is exactly what I've been talking about. I predicted that in Q1 of 2010, the large companies would come out, and by Q2 of 2010, they would begin spending capital. And I also said I didn't think it would be until mid-2011 that we would begin seeing capital among the SMBs because they were going to lag the market by almost a year. And sure enough, that's exactly what happened. So now the SMBs are working forward and beginning to realize that you can't grow your business by cutting. where do we see capital expenditures? We're going to see huge capital expenditures in the healthcare to take advantage of this 25 to 50 billion. This percolates down from the Mayo, from Cleveland, from Pittsburgh, all the way down to the local practice that has 25 physicians. It is non-discriminatory. So that's going to be one. The second one is going to be the use of outsourcing through the cloud. It's going to be the ability to reduce my dependence upon being in the office. So anything you can do to help me, whether it's cloud, whether it's a tablet, whether it is travel, whether it is how do you help me get out of a static environment, an office, reduce my real estate footprint, and move forward. I would say those are the areas that are most obvious.
Jim, thank you again for another fast-paced, very informative session. And our last question we'll actually pose to the audience. As Jim mentioned, we'll be doing additional webinars in the year ahead. info@conversation.com. info@conversation.com is the email address where we encourage you to ask us questions. Let us know what topics would be most useful for us to tackle in the year ahead. And from all of us here at Executive Conversation, thanks again for joining us in today's session. Happy holidays, and may you have a most prosperous and successful 2012. Jim, thank you.
Thank you, and Merry Christmas.
Today's session.